What if you built so much wealth through property investing? It almost felt like cheating. Well, I know it's possible because I've done it myself. I grew up in Housing Commission in Mount Druitt in Western Sydney, and we were so broke that sometimes we didn't even have enough money to buy food. Fast forward to today, I own over $100 million in property. I travel whenever I want, and I help thousands of Aussies grow their property portfolios too. Now, that didn't happen by accident. It came down to learning one thing: how to find and how to scale the right kind of property deals. So in this video, I'm going to show you the exact strategy I used to go from broke to multi-millions and how you can start applying that today. Growing up in poverty is one thing. Believing you're stuck there is another. What most people get wrong, they think property investing starts with money, but it starts with a mindset, especially when you've grown up with none at all. And for most kids who grew up in a poor environment, property feels like something other people do. But that changed the day I got dropped off from a friend's house in Castle Hill, and I watched the streets get uglier on the drive back home. That's when it clicked. If you want out, no one is coming to save you. You have to make your own plan. If you're starting with absolutely nothing, your first property goal isn't financial. It's mental. Start by exposing yourself to better areas, better people, and better mindsets. But first, I put together a free ebook that breaks down the formula I use to build a portfolio of over 100 properties before the age of 33. It's called the $100 Million Vault ebook, and you can grab it absolutely free using the link in the description. Now that we got that out of the way, here's the exact formula I use to scale from broke to over $100 million in property. Step one, find undervalued properties with instant equity already in them. What most people get wrong is they pay full price or overpay because they're getting emotionally uninformed. I always look property deals that are between 10 to 20% below a bank valuation. That way, I'm already ahead before I even sign the contract or sell the property. The trick is knowing how to find motivated sellers and how to run the numbers right. That first property in the Central Coast was only 138,000, but it was probably worth 150 to 160 even back then at the time of purchase. I bought it before anyone else even touched it, because I wasn't afraid to look outside of Sydney. So keep an eye out for properties listings that have bad marketing, not many photos, or just don't look professional, because there's a good chance that those properties will be sold at a lower price due to the bad marketing and presentation. Step two, prioritize good cash flow on the actual property. What most people get wrong is they buy low yield properties that bleed money and then wonder why they can't scale their portfolio further. If the rent doesn't cover at least the loan repayments or more, then you're most likely going to get stuck with finance. Cash flow is what gave me the ability to hold more properties, access more finance, and grow my portfolio even faster than everyone else. Aim for properties with at least a 6% rental yield and focus on areas with tenant demand, even if they're not glamorous locations. A little bit of positive cash flow goes a long way when you're scaling your portfolio. Step three, refinance and reinvest. What most people get wrong is that they wait years for capital growth to maybe show up, then do nothing with it at all. Here's a story. I learned early how to use equity to keep buying more properties. If I bought well and bought the property below bank valuation and market value, and the rent stacked up, I could then refinance, pull the equity or the deposit that I put in the property back out. And that's how I went from 1 to over 10 properties in just a few years. Revalue your properties every 6 to 12 months and work with a qualified, experienced mortgage broker who understands how to scale a property portfolio and has actually done it themselves. Equity is a key to building fast, but only if your deals are solid. Step four, repeat relentlessly. What most people get wrong is they overthink everything. They try to get clever, chase trends. I just kept repeating what was already working. I didn't chase shiny suburbs or fancy development opportunities. I just stuck to the formula of what was already working. Undervalued properties, good cash flow with equity on the way into the property and in metro areas. Then I did it again and again and again. Stick to one strategy that works for you. Don't let fear and opinions of others slow you down, and don't chop and change strategies. So if you're serious about building your property portfolio fast and you don't want to spend the next 5 years trying to figuring it out the hard way, I'm opening up a few spots this month for a free one-on-one call with my team. We'll look at where you're at right now, what's holding you back, and how to apply this exact system to scale and grow your property portfolio. Whether you've got only one property or none yet, or maybe you've got even 5, how to get that to the next level. You can use the link below to book your call with my team right away. So now you know the exact formula of how I used to build over $100 million property portfolio and why it works, even if you're starting with nothing. But if you really want to see what's possible with one smart deal, watch this next video where I break down how I made over $264,000 in one day from just one property deal instantly.